Up now, we have Forum Daily's energy update with Dan McTeague. Dan is the senior petroleum analyst at Gaswizard.ca, a gas prediction website. All yours, Dan.
Well, thanks for that, Nima. And what a week. Again, this massive roller coaster on energy markets. Kind of nice to know, though, that we've had, four holidays in the warmer weather, each long weekend, May 2-4, Canada Day, Wheat long weekend, the August 1st long weekend, and now the September Labor Day long weekend. And we've always seen gas prices drop. They had to. They were very, very high for a period of time. But I think we're hitting a point where we have to recognize that the traders, particularly paper traders, it's different from the physical traders of oil, gas, diesel, jet fuel, propane, and natural gas, are perhaps exaggerating some of the headlines out there, including the fact that there's no deal that the United States is prepared to sign with Iran. The United States is going through a lot of its strategic petroleum reserve in order to try to prop up these prices. Oil inventories globally can remain very low. We know that there's a war in Europe. We know that Europe is going to face a very cold winter. We know that lockdowns in China won't continue forever. Bottom line is that we're seeing a bit of a head fake caused by people who frankly don't know a whole lot about the oil and gas sector, but have taken financial positions, and they're pretty significant. We call them paper traders. Some call them derivatives. There's a whole pile of names for them. The fact is they're out to lunch, and I don't mean to be disrespectful, but you need a really strong argument for a course in Economics 101. What that's meant, though, across the country is that we're now seeing prices we haven't seen in places like Ontario since the beginning of January. Or mid-January, so $1.47.9 on Saturday. We're going to see prices in Vancouver, 186.9. We haven't seen that since the beginning of March. We're going to see Alberta, Saskatchewan, Manitoba stay where they are, pretty much in the $1.30, $1.29, $1.40 range for Alberta, $1.50 in the Saskatchewan, Manitoba range. Of course, we're looking at interior of BC, not moving a lot, still in the 175. And if I trip on over to Quebec, down to 166. So that's a price they haven't seen in a very long time as well per liter. Now, let's go to the Maritimes, because there's a bit of a problem there. I predict gas prices in all those provinces, and we've seen Nova Scotia drop 8 cents a liter. We've seen New Brunswick prepared to do it. PEI will be doing it shortly. But the Newfoundland Public Utilities Board, all those are regulated prices, should have seen an 8-cent drop on Friday, or rather on Thursday. Instead, I guess maybe it's despite my predictions, the PUB and the bureaucrats decided they're going to wait an extra day. Really too bad for Newfoundlanders who've had to pay an extra 8 cents a liter for another day. But here we are this morning, and the Public Utilities Board finally had to throw in the towel and confirm that a guy who's been doing these predictions for about 30 years now for the rest of the country, in fact, for North America, knows a little bit about predictions. Nevertheless, rather than giving myself a bit of a tap on the shoulder, next week, though, I think we're going to see a big reversal, and that could happen as early as Sunday. You're starting to see prices move back up a little bit. OPEC is meeting on Monday. They're not happy with this dysfunctional paper market. They're likely to cut production. Not that they've actually been honest about production and data, but I think that's going to lead next week to an overall increase across the country of about 5 cents a liter for the first week of September. Now, this is traditionally a time when gas prices drop, especially after September 15th, when we shift from winter to summer, rather summer to winter gasoline. So there's a savings of 4 or 5 cents a liter. I don't think that's going to matter a whole lot this time because as we're seeing with restrictions and supplies for natural gas, it's pushing up the price of diesel, which is in turn pushing up the price of gasoline. Ultimately, we're going to see a major correction to the upside. So take advantage of these low prices while you can. The way the markets have been behaving, it's almost as if there is no, there is no scarcity of supply of petroleum products, and there is no war in Eastern Europe. So having considered that alone, other factor, the continuation of the weak Canadian dollar. And while some of our liberal friends like to go around cheering the fact that we've sold a lot more oil, the fact is we're maxed out. We could have done a lot more and brought the price down, and at the same time rescued the Canadian dollar, which now is trading at 131 cents to buy a US dollar. That's contributing about 34, 35, 36 cents a liter to the cost of gasoline and every other single commodity that we consume. Well, that's a wrap for this long Labor Day weekend. Hope you enjoy it. I will have a chance to come back this time next week and firm up where the numbers are heading for September. But for now, this is as good as it gets. Fill up on Saturday. Don't wait till Sunday, and get ready for a pretty significant roller coaster ride ahead. Back to you, Nima.
All right, thanks for that, Dan. Again, that was Dan McTeague, Senior Petroleum Analyst at Gaswizard.ca. He is also the president of Canadians for Affordable Energy. All right, stay with us. We'll be right back. And when we return, we'll have Forum Daily's cryptocurrency and digital asset update. Bobby Del Rio, host of the crypto show The Daily Drop, joins us with his take. So stay tuned.